In any battle or argument, you always have people of good faith and people of bad faith attempting to get their way. You also sometimes have a third party that's there just to muck things up, just to gum up the works. And that is what we're talking about today with the Walt Disney Company and with the proxy battle between them and Trian, because it appears there are other groups now trying to just confuse investors. Hello folks, welcome back to the Pro Channel. It is a joy, it is truly a great time when you are here with us. You are the electricity that drives it all, the gigawatts, as we so often say. Explaining entertainment, keeping you ahead of the culture curve is the cause for the video du jour, and let's get straight to it today as we discuss the fact that there is a third-party group now, ValueAct, which seems to be well aligned with Bob Iger, brought in by Disney, and they have produced documents which are, well, they're called the same thing as the white paper that Nelson Peltz and the Trian Group put out, but they are categorically different. They're embarrassingly different. And perhaps they're only there to create headlines and confuse investors. Are you confused yet? Well, watch the rest of this video, and you won't be. The investment firm ValueAct Capital, allied with Disney's board, published its white paper Thursday as the CEO looks to fend off a Nelson Peltz-led activist effort. That's the subtitle. Main title here, Bob Iger's Reinforcements in Disney Proxy Battle pitch shareholders ahead of showdown. All right, so what's this all about? Well, it's all about this ValueAct group that we've mentioned in the past, and there's been a couple of things that we've said would happen that go counter to what we may want to happen. It goes counter to what our audience probably wants to happen, and yet we've said it because it's true, and we believe in telling you the truth and keeping you ahead of the culture curve. We've said that during the proxy battle, although we don't give financial advice, it was very likely the Disney stock would go up. The Disney stock went up. We've also said that we thought it was unlikely that Nelson Peltz and Jay Rasulo would be successful this year, although we think they have a very good chance the year thereafter. We'll see how that goes. But at least in this case, we're seeing now Disney begin to defend themselves from Jay Rasulo and Nelson Peltz, and they're doing it through this group called ValueAct. Jonas, can you describe to us exactly what ValueAct is and why it is that they're in cahoots with Disney?
ValueAct is basically an investment fund. It's run by Mason Morfitt. He inherited it from his dad. He also got the position from his dad. I've read the white paper, by the way. It's not an intense read. In fact, we could read this entire thing right now, and we'd be done within 3 or 4 minutes.
Hold on, though. We need to specify. When you say you've read the white paper, you're talking about ValueAct has put out a white paper.
Yes,
you're not talking about the white paper from Nelson Peltz, which is 133 pages.
There's 133 pages of white paper here from ValueAct Capital.
Can we pull that up? Is that okay if I pull that up right now?
Yes, please go ahead. Right here, ValueAct Capital. They filed this with the SEC. Here, let's get a brief run through. Just so you know, we're starting from the top here. ValueAct Capital, ValueAct's take on Disney. Disclaimer, that's standard boilerplate. Who is ValueAct? Well, we have a network built by serving on 47 public boards. Oh, that's really nice. It means nothing. We collect lessons learned in a toolkit. You can read all of these. It means nothing. The learn-it-all will always do better than the know-it-all. Thank you. That from the CEO of Microsoft there. ValueAct's track record in media and technology investments. Finally, something here. So their investment in Disney comes from their investment in 20th Century Fox. New York Times, Spotify, Adobe, Microsoft, Salesforce. What is common around all of these right now? Well, let's cut it off right here. These are all companies that want to get subscription fees from you. FanDuel, well, they want a different thing from you. Legoland Parks, I'm going to have to look into that a little bit more. I was not aware that they have some of that, but they're big on the subscription model. So what is ValueAct's Disney thesis? By the way, we are now on slide 7 of this 20-slide presentation. Are you getting the idea here that this is not heavy on information?
This
Investment
is lightweight.
thesis. Yeah. 1, lean into parks. Oh,
What does that mean?
yeah, exactly.
That's 2, a meme already. That's already a meme.
Turbo.
Lean into parks.
Move beyond the streaming wars. Bigger bundles, better consumer experiences, better advertising technology. Work with other studios to test new ideas and create win-wins.
Where do we get to the point where they talk about synergy?
Details.
Win-wins.
See, this is the thing that Disney goes out, and I know for a fact that Disney is going out and talking to major publications and showing them this and saying, "Look at ValueAct's thesis." This is not a thesis. This is something
horrible.
I've seen better stuff from business students.
Well, it's just generic business jargon.
Right. Theme parks are a growth business. This is not talking. This might be Disney's numbers. It might be somebody else's numbers. It's not properly labeled.
I think AI wrote this. Theme parks are a growth business. That just feels like AI.
Yeah. Disney Genie service is launched in October of 2021. Oh, great. What does that have to do with this? Parks and consumer products provide an extra window for monetizing characters and story IP with technology as a positive tailwind. I am telling you this because my master's thesis on the Walt Disney Company is better than this garbage. I'd buy on any day of the week. Okay, here we go.
Okay, so then tell us why it exists. What's the purpose? If it's a bunch of nonsense gobbledygook, why did they make it?
Why did they make it? Because they wanted to look like they had something here.
Why do they want it? Why do they want that though? What's the overarching reason for all this?
So that they can say that they have one. But I just need to point out what they're pointing here towards. They're basically saying reform cable here, which is a fascinating statement here coming from a company that is supposed to be getting out of linear, which I wonder if they're actually listening to Mason Morfitt here, and that is what's preventing them from getting out of linear. I'll also add in here that we'll learn a little bit more about Spulu or Hulu Sports or whatever you want to call this joint venture in here as well. By the way, vectors of differentiation, latest hit show. This is not in-depth description here. Price, depth of library.
Let me ask this.
Yeah.
So Jonas, is this because we've seen this out of what is it, Blackwell's?
Blackwell's is better. This is what I'm saying. Blackwell's
what I'm saying, though,
was
is
better.
This is yet another attempt to muddy the waters, to put out something that's called a white paper. And you've got Nelson Peltz, Jay Rasulo putting out something that is just unprecedented. It's amazing. It's incredible. It's specific. It's high resolution. And then you have these other groups that seem to have been brought in, folks, underline it, seem to have been brought in by somebody who really likes Bob, and they do kind of a parody, right? This is kind of like a pastiche. It's like if you wanted to do a white paper that was kind of sort of like what they're doing over there at Tryon, but you don't want to put the time in or the money, you just hand it to an intern and say, make it look kind of like that so that you can run headlines and confuse investors.
Yes, but I think this says more about them than it does about anything about Disney's business. Like this slide right here is talking about how important it is to build streaming. And this is, in my opinion, this is a 3-year-old idea on streaming. Look, Disney only makes $0 billion on streaming, but Netflix is making $10 billion. They are obviously the enemy here. This is silly. Creative friendly. Well, I actually think Netflix for a very long time was very creative friendly. So what is this? Sports and news. Netflix doesn't have sports and news. Actually, they are getting into sports, but whatever.
Yeah.
Let's hope they don't get into news. Broadcast and linear profits. No. Tentpole franchises. Actually, Netflix is getting there. And they don't have the same overhead as Disney. This is just, oh, by the way, all of these companies right here are bundling services. So this is in their subscription models. This is very.
The New York Times doesn't make money, does it?
It does
make
now.
Money?
It does now because, in a different
way. Through a very strange way, yes.
Yeah.
Okay, for a long time it didn't.
Right. So New York Times Games, New York Times Cooking, New York Times News. They are they're still the newspaper of record for a large portion of America, and they have small game subscriptions and things like that. Their game stuff is actually pretty good.
The New York Times allegedly sells their user or their readers information. That's how they make money.
Yes.
Now. Yeah.
So, and again, we're now 75% of the way through this white paper.
I like a giant green blob that says what has happened.
Exactly.
I did that once in 8th grade with a PowerPoint.
So
They could use a better design. That is just flat.
Can you show the white paper? I'm familiar with it somewhat.
This is the white paper.
No, he's talking about the Nelson Peltz white paper.
The Nelson Peltz.
Well,
I'll give you a page 40.
Okay, yeah. So switching over here. Here, we'll go to
Page 40 is a good one to start with, but you can show us anything here. You can see that.
And I will say this is one of the lighter pages here, and one of the more easily read pages in the white paper itself. But it actually has a density of information here. Go ahead.
Right. Categorically different than what we see out of ValueAct because it's a categorically different effort. So Blackwell's and ValueAct are attempting to spin a narrative for the mainstream. So it doesn't need substance. Nelson Peltz and Jay Rasulo are trying to convince investors that there is a systemic problem inside the company and that they have the data that proves it so that you'll vote for them. Two totally different approaches for two totally different goals.
Right. So I'll just say they're repeating this $60 billion parks investment line. They're saying new board directors. By the way, they're good. I don't know anything about Jeremy Darish. He is a media executive, so they are getting a media executive. The ValueAct agreement is they view that as a bullet point. Okay, that's great. This right here is them trying to quote unquote create bigger bundles. The Hulu and Comcast and Disney Plus deal. By the way, this is two different. This is the same point listed twice here. And Hulu and Disney Plus being integrated together, not a great idea. I fully disagree. And here it is, and has to start work with other studios to test new ideas to create win-wins. Again, page 18 of 19. Sorry, I'm missing a page here. I thought it was 20. It's only 19.
This reminds me of a high schooler who goes with double spacing and triple spacing to make sure they can get those pages that they need necessary for the assignment.
So I wonder if this ESPN, Fox, and Warner Brothers deal was something that ValueAct was like, no, this is what you do. And this thing might not even pass regulation. So as they have said, we have a thesis. One of those theses, by the way, it does smell like theses to me, is to lean into parks, informed by our network and toolkit. Network is essentially useless here, and toolkit is a list. It's like the list of board member qualifications. It's amorphous. It's like 360-degree brand activations. This is a joke. We have a positive collaboration, lots of learning and teaching well underway. Well, of course, you're not challenging the Disney company on anything, and we have tangible evidence of progress. Citation needed. So there, we've reviewed the entire white paper here. And I have added more commentary than they have in this thing. I'm not saying I'm a great business analyst here, but come on. This is nothing. This is fluff. This is something that they can wave to say, see, Dad, I did a good job today. They turned this F into an A by adding a line over here.
And another one of pure, unfiltered excellence is in the can, ladies and gentlemen. We are done here for today, but before we go away, would you perhaps consider clicking the like button? Share, subscribe, click it, stick it to the algorithms, it's the notification bell. Drop a comment down below and let us know your thoughts. Folks, also don't forget to share this thing out on the social media platforms of your choosing. We recommend X, but you do what you want to do. You do what you want to do. Don't forget, folks, that we are continuing the coverage of the Disney proxy battle. We continue to say we don't think that Jay Rasulo and Nelson Peltz will be successful this year. But they could be, and we think they're in it for the long haul. Get ready. We've got at least another year of battle becoming. All right, folks, wherever you are and whatever you're doing, keep learning, keep growing, and as always, keep having fun.